This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Well, good evening, everyone. This is AJ Monty, Chief Market Strategist with the Market Guys, and I'd like to welcome you to today's session, which is our open house Q&A, where at the end I will be going through a rapid fire stock analysis section. And for those who have been attending this each month, you'll know that this is I think the funnest part of the whole evening is going over everyone's stocks and looking at the charts. I did a second time, I uploaded a checklist that is in the handout section of the control panel. So if you go down and click on the arrow, it'll open up the window under handouts. I uploaded it twice, so you'll see two files there. You can pick either one of those, and that's for your benefit, so you could save that to your own computer. So go right ahead and do that, and I'm going to get right into it. This is your candle chart of the Qs. That's the NASDAQ ETF. And as you can see, I have my lines on the chart from last week's, or actually last Friday's market report. And there's a couple things I want to point out to you, not just the resistance up here and the support that's down here, but I have been using the CCI, which is the Commodity Channel Index lately. And this is something that I used back in the 80s when I traded gold and silver. And it kind of went to the wayside for a while. I hadn't looked at it. And then an educational company asked me to actually do a presentation on it. And I did. And I started applying it to the stochastic. So in other words, I stacked it. You see on the bottom, there's two oscillating indicators. The one at the very bottom is the CCI. And the one above that is the stochastics oscillator, which I use quite regularly. Now, the big difference between the stochastics and the CCI is that the stochastics more or less measures the range of the price of a stock, the range of the high, the range of the low, and then marks the closing price as it relates to the high or the low. So in other words, if a stock has been trending up and more or less closing on the highs of the day, like you see back here, I'll show you right here. See right here, this candle. See how the stochastic is going, the candle is green, and the price of the Qs that day closed relatively close to the high. On the very next day, you can see it closed away from the high, and then on this day here, you can see that it closed away from the high. So what happens is when the market or any stock, anyone that you pick, when it starts closing off of the highs, the stochastics will turn down. And the red line on the stochastic is nothing more than a 3-day moving average of the blue line. So it's more or less like a moving average crossover signal on the indicator itself. Now, if you look down at the bottom here, the CCI has a slightly different formula. But the way we measure the CCI or apply the CCI is that you can see that on Friday we closed off of the high, but we set a new high in that particular trading leg. You see, so we closed off the highs, but we set a higher high. We actually opened on a higher high. And what happens is the CCI, the highs on the CCI are starting to show a divergence from the price itself. So another way to explain that is while the prices are going higher, the CCI is starting to go lower. That's a price divergence. And that is the main value of the CCI and how we read it. And so if you want to study up on that, that's a great thing to apply. I don't always keep it on my chart. In fact, during the day, I just go right to my platform right here. I click on studies, and I'll edit the studies, and then I just remove or like here's the CCI, what I do is I don't cancel it off, I just don't show it. So it gives me a cleaner look on my chart, and it gives me a little bit more room to analyze the price. You see, so now the CCI is removed from the chart, but I didn't delete it from the platform. I don't know which platforms are, our audience is using the most, but this is a Thinkorswim platform. I also trade through Charles Schwab. I do webinars for TradeStation. I have clients that use TradeStation, Schwab, Scotia up there in Canada. They use the Flight Desk trading platform. It doesn't matter. The CCI is a very, very popular indicator that you can add to most of the platforms, and hopefully that's going to help you. I want to shout out to my neighbor, John. John is in on this webinar tonight, and John and I, we live in a little known place called Cedar Key. We live on an airfield, and our backyard is actually the runway, and so John and I are neighbors. He's right behind me in my house there, and John is listening in. And John, if you don't mind, I'm going to jump right into a check and use you as an example of why I thought this would be a great idea. Before John and I would get into an airplane, it's always a good practice to go over your pre-flight checklist. Especially me, as I get older, I do not rely on my memory, and the last thing you want to do is forget to check something like the engine or check the engine, your oil pressure. These are good things to check before you take off the ground, because the last thing you want to do is get off the runway and have one of those uh-oh moments, right? So we don't want to do that. The same thing applies with trading. And so what I did is I put this checklist together, and what I'd like to do is, I'm not going to mark on this checklist because it's just a screenshot, so I won't be able to add notes or anything on here, but I want to go through some of these indicators and trends, especially checking volume, the type of candle, and I'm going to focus on the top 3 in this checklist so you can see how this would be applied. So in other words, if you're looking for a stock, right, and I'm going to get ahead of myself right here. Someone type in a stock symbol. Just anyone type in one stock symbol, and I'm going to use that in the example of how to use the checklist. Okay, so who wants to be the first one? Okay, so John Wiseman is putting in BA. That's Boeing. I actually have a position of Boeing, John. I'm bearish on this. I have a put spread on. But anyway, let's go to the checklist. And where did my checklist go? I just had it. Oh, there it is. Okay. So let's look at the trend. Well, the trend is up, obviously. You see the trend. The type of candle is fairly green, and the volume is high, right? So here's the first 3 things on the checklist. The trend is up, the type of candle is bullish, and the volume is fairly strong, right? Now, stochastics, if we go on, I'm not going to use the CCI, but I'm going to show you some, how to use some of the checklists. So the stochastics is showing overbought, but it's not crossing down below overbought, and it's not actually giving us a sell signal right now. So right now, if you're thinking about actually getting into a short position, our checklist is helping us say, whoa, hold off. Don't get short just yet. Although I am short because I took a short back here when the candle's red. But as of tomorrow, let's say, if you're going through your checklist and the majority of these indicators are showing bullish and you're thinking about taking a bearish position, put on the brakes. Wait a little bit until the signal starts shifting more towards a bearish indication. All right. Now, one of the first things that caught my attention in Boeing is that this upward leg, as we're calling it, is quite vertical. If you look back, and if I take a step back here and look back, oh, I'm going the wrong way there. Let me go back and look at this. So if we're taking a big step back and we're looking at the whole year of activity, I would say, and I think all of you would agree, that the most recent leg back here that started at the end of December is quite vertical. This is a dramatic move for Boeing. Now, when we're looking at the signals on our checklist, one of the other things we have to consider is not just the trend and what it looks like, but the length of the trend and how long the trend has been in force. And so, when, a very basic concept that you have to remember is that upward trends, especially ones that are at very steep angles, those upward trends don't last forever. And now, if I switch to a weekly chart, again, looking at the same stock, it's pretty easy to see that we have 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row. So now the question is, all right, all the signals on my checklist is showing green, but do I still buy it now after I see 8 green weeks of upward movement? Well, I would hesitate to buy only because the length and the age of the candle is getting a little stale, right? It's a stale green light. It's an old upward trend that's going vertical. And if you look at the volume on the weekly chart now, what's that telling us? The last 3 weeks, we're seeing a fairly dramatic drop in the volume week after week. So my guess is if I am going to forecast into next week, I'm going to say, well, don't take a short position just yet, but as soon as a red candle shows up, guess what? That might be your time to do it. And then you could go back over your checklist here to see if any of the other indicators are giving you sell signals or reversal signals. You say that's how you use the checklist. So again, that's your gift to keep. Just go to the download right there and the handout box, and you can download it. Okay, now let's go back to the general markets, and then I'm going to get into your individual stocks. Let's go with the diamonds. I'm staying on the weekly chart here so you could see, again, what we're looking at, because in the weekly market report, I didn't go to weeklies except for the Russell 2000. So again, here we have the diamonds. You see the big stretch of green candle. That is the first time that's happened in that length and in that angle on now decreasing volume. You see the weekly candles are starting to drop overall in volume. So that is a sign of weakness. It's not the sell signal just yet, but it is a sign of weakness. The other thing is the stochastics on the weekly chart has now reached overbought, where a week and a half ago it was not yet defined as overbought. You see off to the side here, this is a scale. You see it goes from 0 to 100, and the way you read the stochastic is anything below 20 is considered oversold. Anything above 80 is considered overbought. Now, when you have a long stretch of green candles, you want to keep a very close eye on stochastics down here, because as soon as the close starts to close lower than the highs, then this blue line is going to start to reverse and go lower. And that's the first signal that the momentum is shifting in the stochastics. And then when the blue line here crosses the red, that's when there's a sell signal. And you can see back here, look at that. This is what I'm talking about. When the blue line crosses the red line, if you look straight up from there, oh, it doesn't show it. Let me see if I get across here. Well, it's right around this area where the signal started to cross, you see, and that's when the blue line, which is the K, started crossing the %D, which is the red. And you can see what happened after the market. Remember, this was back in October that sell signal came about on stochastics, and that obviously led to a down market right into December, which is where everyone started to capitulate down here. All right, so that's the diamonds. I have a similar reading on the Russell 2000. In fact, I did record this on the weekly market report. I did anticipate that the Russell 2000 will eventually start turning down. I'm not just guessing at that, and it's not my opinion. It's actually what the charts are telling us. Again, if you look back, this is 3 years of price history. The last time we had such a almost vertical move was back here in October of 2016. See that? And if you look at the angle back then, it's very similar to the angle that we currently have, with one exception, that this leg is a longer leg than the one we had back here going into October. So again, the age of the upward leg is getting quite old right now, because legs are just smaller versions of trends. They're just a leg is a segment, or a segment within a major trend. You have up legs and down legs. So the Russell 2000, again, looking pretty extreme. If you look at the SPY, I didn't look at the weekly chart on the weekly market report, but again, you got the same story. You got all these green candles. And again, I like looking back at history. You go 3 years and say, wow, when was the last time that happened? And it's hard to find anything quite this dramatic. Now, granted, we have a state of emergency that the president has just announced recently. We have a trade war still going on with China. We have political tensions in Washington. We have the Fed kind of undecided now once again. They don't know if they're going to start decreasing interest rates now. I don't know what the Fed is doing, quite frankly. I think they're making mistakes, adding to the volatility of the market. But this is a pretty dramatic upward leg again, and we're at a point where we're reaching resistance back here from the beginning of December, which was that big red bearish engulfing pattern right there. So I'll zoom in. This big red candle back in December was a bearish engulfing pattern. Here too is another bearish engulfing pattern, and we do not ignore bearish engulfing patterns, and we don't ignore bullish engulfing patterns either. Again, this is the first time that I've seen in a very long time where we've had such a dramatic upward spike. Now I'm going to do something I didn't do last week, and I probably should have done. This is a monthly chart going back 20 years. You see this? Now, notice all of this congestion up here. You see this? This again, this is a 20-year monthly chart. And you can see that we have a bearish engulfing pattern on the monthly chart. Again, this is going back to October. Here's a back-to-back bearish engulfing pattern here on the monthly chart again. So while we are seeing some pretty impressive green movement here, the monthly chart, now we still have about a week and a half left in this month. I don't think this volume is going to surpass last month's volume from January. In fact, I don't even think we're going to come close to the volume that we had there. So when you're reading a monthly chart, a weekly chart, daily chart, you read them all the same way, and volume is probably the most important leading indicator that you can look at, especially on a monthly chart. Because listen, if for the next, let's say 8 trading days, we even come up a little bit more, look at the volume and where it would be compared to all of the months. You see back here? Let me see if I can get a horizontal line here. Let me see if I'm just going to draw a drawing, if I can, if it'll let me draw a price. So if the volume comes up to this level here, let me see where that's going to bring us. There we go. If the volume comes up and even we get 20% more volume this month, then that's if you go back 20 years now, let me scale back. Forgive me for fumbling with this, but I want to show you how significant this is. If our volume doesn't surpass what I've even expected or anticipated for the end of this month, it will be the lowest volume month in 20 years. I could even go so far and extend that back here. See that? Let me go get it right on there. There we go. So it looks like we're on track to have the lowest monthly volume in 20 years. Now think about that for a second. If the candle is giving us the direction of the market, but the volume is the leading indicator that tells us or measures the force behind the move, this is an extremely weak rally that we've had, even though the weekly candles are looking beautiful, right? This is looking really, really good. But the overall monthly volume is the lowest it's been in 20 years. So again, going back to the airplane analogy, if you're taking off on a runway and your airplane is pointed almost straight up in the air, right, and your wings are being stressed out, then you call it extreme, we call it an angle of attack. If it's almost vertical and you're pulling back on the throttle, which represents the volume, what do you think is going to happen to that airplane? It's going to start pointing its nose down and start heading to the ground. That's the way I look at the market. I use the volume like I'm measuring the fuel going into an aircraft engine. That's the way I look at this. So if you notice, for the past, if you've been following along with the weekly market reports, I've been pretty bearish. And it seems like we're stalled, we're still going up, but I'm still pretty bearish because of the signals that I'm seeing. All right, so I want everyone not to be scared out of the market or anything like that. I am just trying my very best to make sure that everyone is using good, strong risk management principles, because I don't want anyone, especially those who are listening now, I don't want anyone to be caught by surprise and think, wow, where did that stuff come from? We want to all be looking at the markets. It's okay to be optimistic, but be cautiously optimistic when you're placing new orders to buy anything in this market, okay? So I'm not going to go too far into the rest of the markets unless, actually, I got to look at the VIX. The volatility index is a leading indicator, and like I said from last week's report, I still think the VIX is going to go down a little bit more, but you can look at the VIX has a long stretch of red because that's inversely related to the overall market, particularly the S&P. So we have 1, 2, 3, 4, 5, 6, 7, 8 down candles right there on the VIX. Again, that's the weekly chart. And if you look at the daily chart, it looks like we're most likely going to continue a little bit lower because we had a bearish engulfing pattern right there. This, by the way, was where I started off on the weekly market report, because when you see a bearish engulfing pattern on the VIX, you can't ignore that one either. And the VIX is inversely related, and it is very much a leading indicator for a lot of the traders, particularly the floor traders who are trading options. All right, so and if you go back and look, I mean, bearish engulfing patterns, okay? Scan the board right here. How many bearish engulfing patterns have we had in the past? Looking back, here's one right there. See, here's a big red candle that engulfs not the previous day, but the previous 2 days here. That's significant. What happened? Boom, the VIX dropped. Let's go back a little bit further. Here's a bearish engulfing pattern, kind of odd looking, but it is a big red candle where the body completely engulfs the previous green body candle. What happens? Boom, the VIX dropped. See that? Where's another one? Here's one up here. Look at this. Here's a big red candle engulfing the previous green body, and then we had a dramatic drop in the VIX down here. See that? Big one. And then let me see. That's it for the year. But again, 80% of the time, not 100%, but 80% of the time, bearish engulfing patterns work out to the downside. And again, 80% probability is a high percentage of chance that it's going to drop a little bit. So I'm going with that. All right. So that's it for the overall markets. Again, Bruce, buenas noche in Mexico. You're vacationing there, I presume. All right. Good. Glad you dialed in. All right. So here we go. After John typed in BA, I'm going to go through all the other stocks. Just start listing your stocks. And if you have a question, you could put it in there as well. By the way, if you put in a stock symbol, please let me know what your intentions are. In other words, AJ, can you look at BA? I'm thinking about shorting it. I'm thinking about buying it. I'm holding it. I already hold it. I'm adding to it, whatever. Give me an indication of what you're doing with it, and then I can at least help you with the risk management part. All right, so we're going to look at SHOP. There's a couple of Johns on here. This is for John Long and SHOP right there. Now, let's go and look at this overall. You can see that the stock is pretty much in a trading channel. You see that? And I just did that very quickly. But what I did is I scanned the highs here, trying to connect as many of these candles as possible. You can intersect some of them, but you want to capture as many of these as resistance. So up here is resistance, down here is support. That's called a trading channel when support and resistance run parallel. Now, notice what's happening, John, here. Like the rest of the market, Shopify has been going up quite dramatically. But notice what's happening, okay, to this candle right here. That's not a very long candle. That's a short body candle. That's very closely related to what's known as a hanging man. That's what the Japanese called that, because a small candle and this long shadow underneath. And with the volume the way it is right now, that tells me that the sellers are starting to slow down. That's what that is. And that, again, from if you look at that volume, that's a dramatic drop in the volume, because you have on Friday you had at least I'd say a 20% drop in the volume from Thursday, and the volume from Friday was less than half of what it was on Wednesday. And look what happened. You had a big green candle on here, which was on the 12th of February. And then all of a sudden, there wasn't any really big follow-through. Look, we had this big green candle on high volume. The very next day, it like fell flat on its face with a big red candle on half the volume. There was no follow-through over resistance. So if you own this one, and again, I don't know what your intentions are. You didn't put that in there, but let me see. Did you add that on? Shop. Okay, you're going to enter it. Okay. Well, be really careful. Be really, really careful, because that volume tells me that it doesn't look like they're going for a breakout right there. However, I'm not going to try to talk you out of it. Maybe you know something about the stock I don't, but I would get into the stock only after it breaks out of these highs up here on higher volume. And if you still decide that you're going to get in on that, I would strongly suggest that you put your stop right below Friday's low, right there. So I wouldn't even give that stock a chance, because number one, it's a fairly expensive stock. You know, it's closed at $178.19. If you're trading options, you could do that too, give you a little bit more leverage, but I would certainly get out if it closes below that low, because most likely it's going to pull back to the moving average just like that. Okay, so thanks for adding your intentions on that as well. All right, let's go right to Steve. He's looking at SLV. Steve, I sold out of my SLV position because of the technical indicators, but I'm trying to get back in it, okay? I think I talked about that last time we did an analysis on SLV. I don't see your intentions on that, though. Are you looking to take a long position on that, Steve, or you just want my opinion? Add that, and I'll look for it at the bottom there. Okay, so if you look at SLV, it's actually looking more bullish than bearish, because it cracked up over the 20-period moving average, and the stochastic is very close to a buy signal. You see that? So there is a good chance that silver could rally right back up to resistance right here, which would give it, that's a pretty good percentage move, because it closed at 1482. This line up here is around 1517. So if you're looking for a quick trade, that might be when to go on the long side. But if it doesn't break out over that resistance, it's going to come crashing back down. This could be considered, this whole big pattern here is very, very close to a cup and handle pattern. So this is going to be the resistance that you have to look out for on that one. All right, so let me see, you said that was the symbol for the initial question, but I'm holding some SLV, thinking it may move to 200 moving average. Okay, yeah, it could. So what I would do is, if you're holding silver, I would continue to hold it, but keep an eye when it gets up to this 1517 area. In fact, what you could do is just put an alert there. If you're using the Thinkorswim platform, you could just create an alert, and then you can add your notes right here if you want. So you can add notes, resistance, you could put whatever you want there, and then create the note, and it'll stay right there. You see, so you can if you own it and it gets up to here, and the alert fires off, then the alert is basically telling you stock has hit resistance. Keep an eye on it. All right. At which point you might want to trail your stop and maybe lighten up on some of the position. All right. All right. Let's go to Paul. Paul's looking at MTDR. Again, I should have given you folks. Yeah, you typed that in when I was just asking for a symbol. But if you can put your intentions in there, Paul, go right ahead. MTDR is Matador Resources Company. That one actually looks pretty strong overall. And folks, this is one of the great reasons why just being a fly on the wall on these Monday sessions is so valuable. Because while the general markets might look a little overextended to the upside, we always seem to come across stocks that look like really great candidates. And this stock is priced pretty fairly. In fact, I like this one so much, Paul, and I want to thank you, that I'm going to put this, I'm going to add this to my watch list down here to the right. I'm going to keep an eye on that one, MTDR. I like the technicals on that one. All right, so I just added that to my watch list, and now I'm going to dig into the technicals on this, okay? All right, so here is what could be perceived again as a cup handle, never broke out. So here's the resistance area up here. This is a resistance high basically drawn from this high, this high, this high, and it's approaching the high. What I like best, remember our checklist, the trend, the short-term trend, the leg is up, that's bullish, right? The volume is up, that's bullish. The stochastics has just crossed with a buy signal, that's bullish. We have higher lows, that's bullish. If I put the CCI on there, it's probably going to show higher lows as well. So this one looks really good. Again, I'm going to scroll down, Paul, to see if you told me your intentions. Looking at MRDT. Oh, it is MTDR. All right, good. You typed in the wrong symbol there. Sometimes we get lucky with those. Okay, so you're looking to enter. The way I see it right now, if we get a green candle tomorrow and the volume is still high, that wouldn't be so bad as when you have a stock that's approaching resistance like this one is, and you see the volume increasing, what that generally means is that momentum is building into resistance. So think about this as buyers are strapping on their helmets and they're getting into their cars and they get ready to hit the volume to crash through the brick wall being the resistance. They are preparing for a breakout. That's what that generally means. So if this one breaks out, chances are it will continue up to the next resistance. And what I'm going to do, and that would be a pretty big move right there. So this would, if it breaks out, this would be my next target. Actually, I'll lower that just a little bit because there's a gap fill target right there. See the gap over here? Gaps fill about 80% of the time. All right, so I'm going to erase this and leave the gap fill as a target. And so this looks like it could be a very good candidate. And if everyone else just wants to watch it, then so be it. Someone please make a note to bring this up on the next monthly week, the other open house, because I'm gonna watch this one. But if I don't get into it, I certainly want to see how this forecast panned out for Paul. So Paul, maybe you can remind me to look at that again and jog my memory on that one. Okay. All right, let's go right along. That's one of the best candidates I've seen so far. Antonio, here we go with ACB. Let's take a look at that one. ACB is right there, Aurora Cannabis. These stocks have been in the news lately. I'm still very skeptical of not so much the industry, but the individual stocks within the industry who have not yet proven themselves. This is not a large cap stock, and it's not widely held by institutions. However, it does have a lot of volatility for a cheap stock. All right, this one, ACB, is trading at 705. I don't like the way the volume is dropping. And if you notice, the stochastics is starting to go lower again. It's starting to turn down. That means that's negative momentum, right? The other thing is, if you take this low connected to this low, the stock is right on a trend line. And that trend line that I just drew more or less mimics the 20-period moving average. And so if this stock, Antonio, if this stock closes tomorrow below that 20-period moving average, I wouldn't touch it until it finds another level of support, okay? Because that one is one that if once it starts closing below the 20-day moving average, that's something that would be very negative, because once the stock starts closing below the 20-day moving average, like it did back here, look, see back here, closed below the 20-day moving average, and it didn't really sustain levels over the 20-period moving average until it got to around 5.5. Look back here again, once it started closing below the 20-period moving average, went from 7 all the way down to 4. You see? So here's the history that proves what I'm talking about. If this stock, especially after a nice run up, starts closing below that 20-period moving average, then breaks down below the trend line, I wouldn't be surprised if you see it down around $6, which is going to be down below that previous support level. So be really, really careful of that. Right now, I wouldn't be buying it if it were me. I'd be waiting for next green candle or a bounce off of support. So hopefully that helps you out there. All right, so try to keep up with the pace here. We still have a lot of time, but we have way more stocks, and I think we're going to have time left. But David Silber is looking at EG, and his comments there are EG, where stock with strong fund is going up on strong fundamentals. David, I don't care. EG, where? Let me see. I don't see EG. EG. Well, did you put a stock symbol in there, David? Let's see. I'm typing in EG because that's what you have. It says EG, where stock with strong fund. Maybe it was just typos there. Let me see. Okay. How do you feel? How do you feel about taking short position on stocks with strong fundamentals and have? Oh, okay. That's the question that you had. It wasn't a stock symbol. All right. Let me type in someone's stock symbol, and then I'm going to get right to your question, David. In fact, what I'll do is I'll go to CVS because that's a stock that you had there, CVS. All right, and let's go back to your question there, and let me find it and see where did it go. Where did it go? Oh, here it is. I know it's in here. Okay, how do you feel about taking short position on stocks with strong fundamentals that have been strongly overbought? All right. Fundamentals are okay for investors, but here's the only thing. And in fact, my neighbor John and I were talking about Ford, right? Ford, ticker symbol F, has been beaten up. But if you look at the dividend, it's one of the best dividend stocks out there. And Ford, one of the main reasons it was down is not so much on the fundamentals, but what the company was forecasting with regard to loss of sales due to the Chinese trade war, right? But now all of a sudden, I was reading Yahoo Finance News before I got on to this webinar, and now, in the overseas markets they seem to be more optimistic about a Chinese deal being struck and the trade war being ended. So companies like Ford and all those other ones are going to react to that. At this particular point, with all of the fundamentals that we have, it's more of the emotional aspect of the market that's affecting prices right now. So I have to go with the technicals, because by the time the next fundamental report comes out, the trade war might be over with already. And if you're trading with these quarterly reports and the market is ticking away dynamically each and every second, what good are the fundamentals unless you're just looking like Warren Buffett? You're just looking for good bargains in dividend stocks or growth stocks. Then that's a whole different strategy than what we're talking about here. So that's how I feel about fundamentals, is that they're more delayed and they're not really a great leading indicator for anything. They're good. Fundamentals, to put it a different way, fundamentals tell us which companies to buy or sell, but it's the technicals that tell us when to buy or sell those stocks. So again, look at those overbought indicators, and that would be a good idea. Now, with that said, look at CVS, which is your symbol. Look at that. We touched on Friday. We touched that resistance right there. The volume is strong, which is good. But how many green candles do you see in a row there? 1, 2, 3, 4. Now, that might not seem like a lot, being that we just saw 8 red candles in a row for the markets. But again, looking at characteristics of this particular stock, again, we have 4 red candles in a row. When was the last time you saw 4 red candles in a row on the stock? Look, here was 3. Here was, no, this was a red candle here. So here was 2. Here's a long stretch. Here's the longest stretch prior to this recent stretch of green. And you can see what happened there. I think that this stock is still strong until the volume starts dropping. So you got to be really careful about taking a short position in that. The stochastics is showing overbought, but it's starting to flatten out, but it hasn't turned down yet. If you're thinking about shorting a stock like CVS, I would wait for the stochastics and the volume to drop first, and then as soon as you take a short position, I would set your stop level for an area above the market. Again, short selling is nothing more than playing the market on the downside, where you borrow stock from your broker and then you repay the loan after you sell the stock. But that's a stock that I would keep an eye on. Right now, it still looks like it could go a little higher because of the volume. But, if the volume is lower tomorrow and stochastic starts crossing, all bets are off for the long positions, and you might have short sales starting to come in. All right. We have Richard asking a question. Hi, AJ. I bought RY in 2018. Let's take a look at this one. RY. Bought that one in 2018 for $78.80. All right. I have 2 questions. One, has this stock formed a V formation or a cup and handle? Well, that's the first question. I'll get to the second after I answer this one. This could be construed as a possible cup. Well, maybe that's a broken cup. But it's very clear, Richard, that this is a resistance area. So let's assume that it is a cup starting to form. This is the resistance that matters the most, whether it be a cup and handle or not, okay? Number 2 in this formation, you see a green candle on higher volume, and the stochastic is starting to turn up. So what that tells me is that this stock actually has a chance of breaking out, okay? So if it breaks out, and I think it could, all right, the futures markets were up a few hours ago, and so that momentum could carry into tomorrow's session. So if it breaks out, this former resistance will turn into support. It's called role reversal. It's a very common occurrence. So if you decide to hold on to this and it starts going higher, your cost base is up to around $78.80. It could very well get back up to $78.80. At that point, you have to make sure that you're not going to go back into a losing position. So if it gets anywhere close to your entry point, I would trail the stop up to protect yourself on the way down. All right, so Rich's second question is 81.44, the breakout point before a possible move to the, okay, I think I answered that question already. But 81 is a far stretch. I don't think it's going to get up there right away. I think if you get this breakout, that resistance will hold, and it's probably going to play in this area for a little while with that support holding. So hopefully that helped you out there. All right, Ron Burr, welcome back. Longtime follower of the Market Guys, particularly on these web sessions, and he's looking at Pfizer PFE, Pfizer Inc. Very, very solid company. I think, listen, forget technicals for a second. Pfizer and the pharmaceutical companies are positioned perfectly because, and here's why. These are companies that are going to continue to grow as the baby boom generation ages and as the general population of the world ages. they're going to need pharmaceutical drugs because they go to the doctors, and guess what the doctors do? They prescribe, right? Now, on the other side of the coin, you have President Trump at war with the pharmaceutical companies, right? He's at war trying to get the prices down. And since President Trump has been in office, because he's been campaigning on these points, I want to show you something here. And this really is a testament to the resilience of pharmaceutical companies, right? Donald Trump got elected back here, right? Down on the lows when Pfizer was trading 30. He has been at war with them constantly, trying to get prices lower. This stock is still in an upward trend. So if you're looking at it technically, yeah, you see an upward trend. Can it pull back? Sure, it can pull back a little bit. But I think any kind of a pullback on Pfizer is generally going to result in a new opportunity to buy it. It may be a role reversal support like we see back here. This whole area right here is a great area for investors, especially who are looking for an entry point. Now, again, Ron, this is a weekly chart, so you want to be more specific with an entry point. All right, I'm going to look at the candles. This is a doji. You see that doji right there? So what I think is going to happen, dojis usually show up at pivot points. See, here's a doji from Friday. Well, guess what? There's a doji from that day, and what happened? It pivoted lower. Look at, where's another doji? Here's a doji. It went down, pivoted, doji went up. See, they usually show up at pivot points. Here's another doji right at that pivot point right there. So if you look, here's another doji back here. See the cross? Went down, doji showed up, it pivoted, went up. So dojis are very reliable as signals of indecision, again, generally found at pivot points. So what does that mean for Pfizer? Although the stochastics is going up, the volume is dropping. So here's what I would suggest you do. Erase all lines. I'm going to erase all lines here. Clear the whole drawing set. I'm going to draw a support level right here at that low. If a doji is a sign of a pivot point, and we do get a pivot point, it'll probably drop, right? Anywhere in this area, right between 41.5 and 42, I think would be a great entry point, especially if you're trading options. I'm going to give a little option tidbit for those who've never traded options before. If you wouldn't mind owning Pfizer for the long term and maybe collecting a dividend on top of holding the stock, you could obligate yourself to buy it down here at 41.5. How do you do that? Well, you learn about how to trade options. And if you look in March, let me give you a little, my screen's a little slow right here, but look at the March 41.5, actually the 42s are trading. The March 42 calls are trading around 55 to 60 cents. Now, if you want to obligate yourself to buy the stock at 42, someone will pay you almost 60 cents a share just to put a buy order in below the market. Keep that in mind as I look at the chart. If you're willing to buy it at 42 and someone's willing to pay you at 60 cents, your cost basis would be 41.40. So if you sold puts in that, you're obligating yourself to buy the stock right on the support level. You see, right around here. If it doesn't go down to that level, you just keep the money. So for every option that you sell, that's cash in the bank. All right, and there's other ways to take in the cash that wouldn't require that much money, but that's a general, just a brief explanation of the, introduction to the world of options. There's money to be made out there by just selling puts and stocks that you wouldn't mind owning. So Ron, thank you. That worked into a tangent of an option lesson. I appreciate that. Wow, I just noticed we have a lot of people on this call. I didn't realize we had that many. Welcome everyone for those latecomers. All right, Gene Otto, welcome Gene. Hope everything's going well up there in Canada for you, especially your mom. Appreciate you being able to take time to join us. Gene is looking at GNTX. GNTX. Right there. Wow. Immediately, my eye is saying buy. Immediately. Now, why? Why is that? I mean, it's very rare that the chart hits me in the face like that. Here is a textbook. I'll repeat, textbook trading channel. textbook. Look at that range from 19.5 up to 23. There are two gaps above the market, here and here. I love gaps. 80% of the time, gaps fill. Gaps act as price magnets. Look back here. Look all the way to the left. You see that gap right there? You see this? Stock gap down. Remember what I said, 80% of the time, gaps fill. What happened? The stock went from 22 up to 23.5, filled the gap. Boom. 80% of the time, gaps fill. So I love this, that there's two gaps above the market. That's number one reason to buy. Number two, you have a fairly strong green candle. The volume is holding steady down here. I don't see it trending lower, so that's a good sign. And Stochastics just on Wednesday gave a buy signal right here. So if you bought this around 2009, oh, you said you got in at 2009. Perfect. Hold on to that, baby. Gene, I'm not going to ask you a guess at it, but where did you put your stop? If you bought it at 2009, where is your stop? I know you well enough to know you did put a stop in. Okay, so tell me what that is, and I'm going to look for it. I'm guessing it's going to be somewhere below support. And let me see. I know the system is a little bit delayed there, but Gene, if you could just tell me where that was. All right. Oh, Parama, thank you for joining us. That's okay. You joined us late. Yeah, it did feel like Sunday because of the holiday. All right, Gene. I don't know where your stop is, but I would suggest you put your stop somewhere below 19.5, and then as the stock goes up like this, I think it will most likely cross over the 20-period moving average. So when that happens, I'm being optimistic for you by saying when. When the stock crosses over the 20-day moving average, like it did here and like it did here, move your stop up and trail it or reset it right below the 20-period moving average. Because if this upward leg is any indication of what's happened before, especially in the same angle, you see the angles at which the stock has gone up, most likely this stock is going to continue up with it. So if you have your stop set below the support level and the stock duplicates this wave that we're seeing, most likely once it crosses back down below the 20-period moving average, it's going to drop like it did here and here. That's why when it goes up, you got to trail your stop up with it. Okay? All right, let's make sure. I'm just going to do a last check, see if, okay, Gene, all right, so 1940. All right, I see there's a delay reaction. So 1940 is your stop. That's absolutely perfect. It's below support. You're in good shape, ready to go. And thanks to Gene, I'll bet you there's some folks that are going to look at this one tomorrow as a buy candidate. That's not my recommendation. That just came up by, just sheer luck at this particular point, the way people submit stock symbols. All right, let's keep going. Let's see, RTN. Did we look at that one already? Let's see, RTN. Raytheon. This one looks good. This is a really good trading stock, but it's better for the option traders. What I would watch out for on this one is that the stock is getting very close to a resistance area. And this most recent upward leg is quite extreme. Again, compared to what we've seen in the past, this is an extreme upward move. The stochastics actually look as though, even though they're overbought, it looks like it's getting ready to cross. So I'd be really careful with that one, David, and trail your stop up. Very, very tight. I don't know where you got in on that one, but I would be really, really careful with that one. All right, let's see. We have FCAU. Anthony Nickel, welcome. Please, folks, tell all your friends and family about this monthly event. The more people we have coming in on this, the more stock symbols we're going to have, and the bigger our watch list gets. Right away, Anthony, I see this one as a buy. This is Fiat Chrysler, but this one is in the same boat as Ford is. Now, here's the main reason why I say buy pretty quickly. You see this gap down here? There is a gap right there. And if you look close enough, this gap recently filled or came very close, maybe a penny away from filling. Now, the first rule that I had for everyone, and I mentioned with regard to gaps, is that 80% of the time they fill. The second part of that rule is after they fill, there's an 80% chance that the stock will reverse and go the other way. Now, interestingly enough, this gap filled, the chance it's going to go the other way. Well, guess what? There's now a gap above the market as well. So the gap is filled. There's a price magnet above the market. So I'll put my price target right up here, right around 17, and look back at the past in this stock. Look, here's a gap, came very close to filling, boom, and then reversed. Here's a gap down here. It filled. What happened after it filled? Boom, it reversed. Here's a gap up here. What happened after it filled? Boom, it reversed. Then gap down after it filled, it reversed. This is a classic gap fill. Here's a very small gap back here. See that? Look at that. It filled. Didn't reverse after that, but it definitely filled. But again, 80% of the time, that 80-20 rule applies to gaps on both the upside and the downside on that. So again, I like this one. I'm going to put this one on my watch list as well. Thank you very much, Anthony. I'm going to put FCAU, and I'm going to keep an eye on that with you. See, the reason I'm adding that to my watch list and is because, I don't know if you could see this. You see this watch list off to the side? Let me see if I can scroll down. This is my actual watch list. So I look for candidates that have good technical signals, and there's about 60 stocks on this one right here. You see this? And when I get out of a position and I'm looking for a stock, let's say I'm looking for stocks for our equity traders, what I do is I click on this column, see where it says last, and I look for stocks for the equity traders that are priced anywhere between $4 and $20. I'll generally look in this area right here, and you can see like OIH is in there, SLV is in that price range. Now look, FCAU, thanks to Anthony Nickel, is right there next to silver, SLV, the Silver Trust. And so there's a good chance that FCAU might wind up on one of my trade candidates, because that's the way I maneuver my watch list. If I'm an option trader, and I am, but if I'm putting trades in for the option traders, I'm looking for a trade candidate, I'll sort the most expensive at the top now and work my way down. Because for the option traders, you know, you could still trade like Amgen, even though it's $188 a share. We can go in there on Amgen and find an inexpensive option to trade, say priced within, you know, a $20 range, you know, something like this. So like these calls for Amgen, I could buy these for $685 right now. You see that? Or tomorrow morning, I could buy this for $685. So I can get in on a very expensive stock for on the cheap by using the options. All right, I got 3 minutes left. I think I will have one more. Joe Conklin, how are you? TRVG. This is one that we've been looking at. In fact, this one went out as a trade alert, and it's still, look at this, Joe, it's still stuck in the triangle. I put this one out as a trade alert. We're still holding this one, and it's still in the triangle. So this, as it reaches the apex right here, as the apex of the triangle, this is called the symmetrical triangle. If you know how to trade triangles, the rule is if it breaks out of the downward leg, which is the upper triangle line here, it will generally go higher. If it breaks out below the bottom trend line, which is the bottom line in that triangle, it will go lower. So with a symmetrical triangle like this, the rule is trade the breakout. So if we are already long this because of these candles back here, if it drops below this level right here, we're going to immediately get out. And then, of course, we would short the position at that particular point. So right now, it's we're still holding. But if you're looking to buy this one, this red candle is not what you're looking for. You're looking for a green candle. You're looking for candles over the 20-period moving average, or you're looking for a breakout. I have a feeling that we're probably going to get stopped out on this one just by the looks of the stochastics. You see that? Because stochastics are getting ready to cross with a sell signal right here, and that, of course, would be bearish. So we just ran out of time. We didn't run out of stock symbols. I want to thank everyone for joining us. Again, please make sure you download or take a copy of the handout. Down at the bottom, you'll see handouts. Just copy that, save it to your computer, and that'll be your checklist that you can use for when you're trading your next trade candidate. Thank you so much, folks, and I'll talk to you next time. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.